All right, all right, all right, all right. We live. We live, we live, we live. What's good? What's good, man? So, first things first, happy Sativa Sunday. And so, as y'all can see, I was able to fix the camera a little bit. You ain't got that crazy box fob on my face. Don't worry about the little timer. That's all good to go. And the main thing is, I got to focus on the camera in front of me. Last episode, I kept looking down, looking all over. It's like, yo, the camera's in front of you. I'm talking to y'all. So, what it do, good people, man? It's your boy Zay. Welcome to Sativa Sunday, your favorite stock market show for fundamental, macro, and technical analysis. I'm your host, Zay, the Wealth Strategist, and I want to welcome you all to another great episode of Sativa Sunday. So it's going to be a good one. I got a few guests that's going to be joining me tonight. We got a full pack agenda to talk about, right? I don't want to spend too much time on this SVB bank stuff because it's just a whole bunch of noise, all that other shit. But it's got to be addressed, right? People probably want to know what my thoughts are, what I think. And so I'm going to break down probabilities and all of that. We're going to get into that as well. But real quick, before we get into the show, let me go ahead and pull up my show notes. So as I was saying, we're going to recap last week. So we're going to talk about all of the catalysts that went down this past week, which was basically NFP, Powell's testimony, and then, of course, this whole banking thing that's like kind of going crazy. Of course, we're going to preview this upcoming week, right? We got a lot to talk about this upcoming week. It's pretty much packed every single day. And we're going to get into that. Then we'll also take a look at a couple of technical indicators. And then tonight, because I have some guests joining, the flow of the show going to be a little bit different. I'm going to knock out my what's the narrative piece real quick, but then I'm going to get them on, and then we're just going to have a nice, robust conversation and kind of give you some impacts and stuff like that. So, yeah, tonight's a good one, man. And as you can see from the title of the show, right? Operating through the noise, staying calm through the chaos, during chaos in week 2 of the March Showdown. At the end of the day, man, it's a bunch of fucking noise out there. And y'all know me, I don't play the fluff game. I'm not about all that. What if this is, these are the probabilities. This is potential impact. Let's let it play out. No matter, it's not 1,000 ifs and ands, this and that. I'm not about to do all that. I'm just going to let these people do their job and see what happens. But we are going to be prepared for some probabilities. You feel me? So, but I do want to help people cut through all the noise, right? What do you listen to? Who do you listen to? It's just a whole bunch of shit going on. So tonight's going to be a good one, man. Tonight's going to be one of those ones where I feel like I'm back in my bag tonight. I get to get in my conspiracy bag a little bit. The deep state bag. But with that being said, a couple of announcements before we get into the show. I want to shout out everybody in the comments. Drop where you tapping in from, who you are. I'm going to show y'all some love. Outside of that, of course, as I always want to do, I got to shout out my community. So shout out to the runners. Shout out to the runner gang. If you in the chat, go ahead and drop those runner emojis. Type in pound runner gang. Show me some love. Shout out to the runners. Also, we do have roughly, I want to say about 40 spots still left open until we close the community. So if you are looking for a home, we do have a few spots open before those doors close. So definitely check us out. And of course, got to get into my sponsor statement, right? Hold up 1 second. I should have had this already pulled up. So shout out to my sponsor, man. Sativa Sunday is now a sponsored show. And so I got to get the screen up 1 second and shout out my sponsor. So let me get this up. And let me add that. So once again, guys, I want to shout out my sponsor. And I need to zoom in so y'all can really see that here. That's a lot better. Caniba, right? So Caniba is a new company that makes hemp cigars, a healthier, more natural substitute for cigars that are made of traditional tobacco. The company's mission is to offer customers a healthy and more organic substitute to conventional tobacco cigars by utilizing premium hemp and CBD. That's right. They don't use no nicotine, no tobacco, no fillers, no additives. None of that stuff. Is straight hemp and CBD. So it gives you a really good vibe. And so, yeah, if you go to this website and check them out, you can use code Sativa Sunday for 10% off on your order. As you can see, they got some pretty dope flavors. Today on the show, I'm going to go ahead and I actually have today, let me pull it up. So shout out to the sponsor. I'm on the lemon runts one today. So I'm on the lemon runts So this is the one right here, that lemon ranch. I'm gonna be on that one today. But yeah, so and shout out to Truth Beliefs right here. He said had their stuff before premium. Yeah, man. Shout out. It's a great brand. Somebody say, can I pass the drug test? Yes, because it's only CBD. It's no THC, so you don't get no head high, none of that crazy stuff. It is really a good vibe because it is pure CBD in hemp. So shout out to Kaniba. Shout out to my sponsor. Again, use code Sativa Sunday for 10% off on your order. And again, shout out to my sponsor, Kaniba. So now that we got all that good stuff out of the way, let me go holler at the chat, and then we're going to get this show started. All right. So Jeremy say, what's up, boss man? Learning and getting better every day. Looking to see continuation in the selling channel. Take out January lows. There's a chance for a bounce too. Jeremy, you're always first in the chat and always showing love, my guy. I appreciate you. We're going to talk about that. Brian, he say, let's go. What's good? Dave is in the chat. What's good, my brother? Kurt is in the chat. What is good, family? France, my God. Good evening, family. My boy Andres is here. Happy Sativa Sunday. I know he's putting one up in the air. What's up, family? My brother E. Jamila, love the cat. Yes, shout out to Dad Gang. Not an official sponsor yet, but hopefully I'm working on that. But I love their hats. Quality hat. Shout out to all the fathers, present fathers too. Hey, family. What's good, Michelle? Lonzo Chambers, what's good, brother? Jamila say, can't predict it. Just be ready. My big bro Tim is in the building. Kevin, what's good? Michelle, she's from St. Louis. Christine is runner gang. Kevin say, setup looks fire. Appreciate it, man. I'm trying to upgrade a little bit. You know what I mean? Got a new camera, all that. I'm going to have to get some little background stuff or figure something out with the background. But we're gonna get there. Right? We're going to get there. Another runner. Already mentioned that. What's up, Zay? Got hip to them at Invest Fest. Yeah, they was at Invest Fest. Yep, that's where I met them at too. Guyana in the house. Oh, somebody that is going to join my show has a very they have a very good connection to Guyana. So shout out to Guyana in the house, man. Gotta show them some love. So that's everybody in the comments, man. I done been rambling for like 7 minutes. I need to hurry up and get this show popping because we got a lot to cover. God damn. So look, usually y'all know I have a whole agenda and just a thing, like just shit I want to go through. But everything that's been progressing over this weekend, I was like, you know what? I got to kind of get back to the old format. And let's just really start with, we're going to recap last week, but we're going to really just kind of get into the whole narrative of things. So let me just pull up my chart real quick because y'all know I love to put the narrative with the technicals because that's kind of how I see it, right? And so that's going to be a one day. I'm just getting the screen right before I pull it up. All right, so let me add that to the stream. So let's recap last week, right? So let's just first off talk about last week. The title of the video was NFP Week, the March Showdown. The next 3 weeks are pivotal. And did I not say that these next 3 weeks, shit was about to go down? It was about to get real. I pointed out a few indicators that say, hey, the market is at extremes. I was basically saying, hey, look, something, we basically broke the 3998. We got a relief rally, and if it was going to be real, the Bears had to step in and straight squash it down this week. And I'll be, boy, oh boy, they came through. Boy, did they come through. So let's recap real quick. So coming into last week, we knew the hot items was going to be the NFP report as well as Powell's testimony on Tuesday and Wednesday, right? So let's just dive in real quick because we came into Monday. We had that crazy Bostic bounce, right? We had the Bostic bounce is what I like to call it. And then Monday, the thing, and I talked about it on the last episode, was I would like to see us come into Monday, get a pop, and then sell off the rest of the week. We came in Monday. We got a pop. We got right to the 4080 where it was like, listen, if the Bears going to shut this shit down, this is where you got to shut it down. And you got to do it with force. And we got the rejection. You got your first follow through day with force. And then, of course, we got your sell off the rest of the week. Now, this was Tuesday, right? So let's get into Tuesday. That's when Powell basically shut shit down. Powell came out and was like, look, he said the terminal rate most likely going to have to be higher. He stood his ground during that press conference as he should. And the market didn't like it. They finally understood, hey, there's risk in the system. We're going to have to go higher for longer. The data continued to be hot. And so, Powell was just like, look, we're going to have to go higher for longer, right? So that was Tuesday. Then Wednesday, he had to follow up with another testimony. And the big takeaway from that was just basically that, hey, he did come out and say no decision has been made for the March meeting, but he opened the door to a 0.5 in March. And this is where I have to come out and say, if you've been a fan or been watching Sativa Sundays, I got to come out and say, hey, guys, I probably made a mistake. I was wrong here, because a few episodes back, I had mentioned that in January, when they did the 2.5, I thought personally that capped them at 2.25 for the rest of the year. I personally did not see no reason why, if you didn't do a 0.5 in the beginning of the year, why would you do a 2.5 then go back to 0.5 then back? Like, you playing games, right? And then that doesn't instill trust in the American public. So therefore, I was like, yo, once he did that 2.5, I said, oh, he's capped. You can go back one day to watch, I think what episode it was, but I was like, yo, he's probably capped at 2.5 for the rest of the year. They just going to 2.5 it up for the rest of the year till they got to get to how high. So he opened that door to that 0.5. I had to step back and say, all right, Jerome, you've grown a little bit of balls here. You ain't just letting people run over you. I feel you, dog. You know what I'm saying? Data dependent, as he would say. So, I was like, okay, so those was kind of the big takeaways of what Powell said. And I mean, it was a very, he was very like in his bag of, we fighting inflation. I don't care about people losing jobs. And, it's just the necessary evil. It's the necessary medicine. And that sparked some of the sell-off, right? That sparked some of the sell-off. Now, the next thing that I wanted to get into next week, and I'm saving a lot of the conversation of the SVB stuff for when my guests get on. I don't want to get into too much of that. But the other impact was NFP, right? So I really want to just kind of stick to what I was talking about, because the bank stuff came out of nowhere. I had no clue that was about to happen like that. NFP came in hot. 311 jobs versus 225. However, wage growth gain was less than expected, and unemployment actually went up. It went up from 3.4 to 3.6, right? So the way that was interpreted was this. That report had a little bit of something for everybody. One, the job market is still showing it's hot and it's tight, and that means Powell got to go higher for longer. However, we know that wage inflation is one of those areas that Powell is kind of looking to tame, and so that's not running rampant, and so that's good for Powell. However, that's not good for us, right? Because if inflation going sky high, but our wages ain't keeping up with inflation, then you gotta go get multiple jobs, right? You gotta do what you gotta do to make ends meet. So even though wage growth is that inflation is moderating, the fact that inflation ain't moderating it, you got to be careful with that, man, because that's a double-edged sword right there. So that was NFP. So NFP, right, as we always talk about, Fed decision impact, like data that impacts the Fed decision, right? That was the NFP. That's still hot. So that narrative of higher for longer, hotter data, that still holds. We are away from the soft landing narrative that we've been talking about. Like, now all the data is just hot. So coming into this week, before I even get into this week, we already know that if that narrative still stick, we're probably going to see continuation again. Another thing that happened this week was, of course, the bank failure. Now, again, I'm not going to get into that too deep, but what I am just going to touch on real quick, and before they all come back, before I have my guests come on, is that some people are like, yo, this happened very fast, but I want you to take a step back and notice that little things have been happening that led to this. You had the FTX collapse, that was 32 billion. Then you had Silvergate Bank, which was associated with crypto, that collapsed, and that had some ramifications. And so now you got this bank. So now people are like, now it's not that it's all happened all of a sudden. No, it's just the crack is getting way bigger. That, and now we're seeing more of the impact. It was like, oh, well, it's just crypto, so people sweep it under the rug. Oh, it's just Silvergate Bank. They just mess with crypto, sweep it under the rug. Now, the VC money is hurt. They're like, oh, hell no. Y'all better step the fuck in. Save us, motherfucker. So, but it ain't just start happening, or it ain't just happen overnight. As I'm telling you, if you've been a fan of this show, I've been talking about hella risk in the system, and that eventually something was going to break and something was going to crack. And, we here now, right? We here now. So Not only did the bank thing happen, but ultimately what I was saying that to get into was that all of these events that happened over this past week, the impact of that was this. Remember when I showed y'all the CME tool last week and I talked about how we need to pay attention to the pricing of what is the Fed going to do? Well, check this shit out. As of last week, when we last looked at this, it was about a 50% chance of a 2.5 or a 0.5. After this bank stuff happened, look at that. 84% chance he do a 0.25. They done got rid of that whole 0.5. So they thinking, oh, this putting some pressure on Powell. Who knows? We're going to see. But again, another impact that if you've been watching the show and paying attention, you was prepared and you kind of, knew this could be a possibility here. Now, what I want to say is with all of that happening, right, all of that shit going down, when you look at SPX from a weekly perspective, and as we recap this week, all of that led to a down 4.5% week. The Bears is back, baby. This is one hell of a bearish engulfing candle. They made a statement. Niggas are selling. There's no way to put it, right? Like at the end of the day, you had a double inside week. You got the breakout to the downside, which meant, hey, we trying to go to the downside. We talked about the relief rally. We got the pop, and now you got that. Oh, this was a bull trap, and a lot of people are trapped. And the Bears got control of this market, right? And so that is pretty much the recap of last week, right? Again, we're going to talk about the SVB stuff, but as far as just economic data, the whole Powell stuff, and just the NFP, what was the impact? Well, Powell basically was like, yo, he said the terminal rate got to go higher. He opened the door to a 50 basis in March, and NFP number was hot. All of that points to higher for longer. I'm not going to speculate on what he's going to do in the March meeting, but all I know is that Fed terminal rate got to go above 5 to 5.25. And could that possibly open the door to them talking about 6%? Oh, baby, I can't wait for that dot plot to come out because that's going to be big. But when that come out, if we see 6%, oh, baby, it's going to be some things to talk about then too. So that is, like I said, that's pretty much the recap for this past week. So with that being said, I'm going to transition into this upcoming week, kind of talk about a few things that I'm going to get my guests on, and we just going to finish rocking out. So with that being said, let's transition to this upcoming week, right? So this upcoming week, a couple things I want to show that I normally do is number one is the earnings calendar. Now, earnings is this earnings calendar is light. I ain't going front. We pretty much are wrapping up earnings season. It's not too many big companies that's going to be reporting. Like you got Adobe on Wednesday after the close. You got Dollar General before the open on Thursday. You got FedEx after the close. But after that, I mean, you got like what was some companies I was looking at? Like SentinelOne. That was a cybersecurity company. They're not doing too good. They probably losing a ton of money. So I wouldn't mess with that. But they probably get shorted into the ground maybe. You got like UiPath. I know that's another art special. Williams Sonoma is pretty, they do that, talk about consumer health and stuff. And then you got Signet Jewelers. They, for some odd reason, people still buying jewelry because they always seem to do all right. But this the earnings calendar. I mean, you guys can see the I'm just going to move on past. That's why I did not plan to spend much time on this calendar because it ain't that much really popping. So that's the calendar. Let's get into what really this week is all about, right? So hot topics. Michelle Tucker say Meta on Thursday. That's not Facebook Meta. They already reported. That's a different Meta. I don't even know who that is. When I saw that, I thought that was them too, but that's not Facebook Meta. That's a different Meta. But let's get into this economic calendar because that was the main thing that so hot topics for this week is definitely Tuesday's CPI report. So tomorrow, well, let me not even skip tomorrow because tomorrow is going to be all about what happens with this bank. Do they get bailed out? All of that. And again, I'm saving my convo for that stuff a little bit later. But tomorrow and tonight is all about this bank. What's going to happen? Are we going to see? Is it going to get exacerbated? Does this contagion go on? And we're going to talk about that in a second. But it's all about this bank, right? This bank, You know what I'm saying? It's going to be all about this bank on Monday. Tuesday, though, it's CPI. So even though tomorrow emotion is going to be high and it's going to be a lot of chatter and distractions and noise about this bank, don't forget we get CPI numbers tomorrow, Tuesday. And so the expectation is for it to be 6%. The previous was 6.4. So they are expecting for it to decline. Now, remember how I keep saying this month, the data was all about, was January a blip or was it a real trend? So if you look at this CPI, I'm putting CPI on a line chart. Y'all know I love line charts. Look at this trend. So since July when it's peaked, it has been on a nice downtrend. But if you know anything about, peaks and valleys and pops, then, okay, this is just the first leg down. You could always get your retrace, right? For all you technical people that love retraces, you get you a retrace up to maybe 7, and then it starts to decline. And then just know when we get into these 5s, that's going to be another area where you get distribution and accumulation, because it ain't just going to break that 5 that easy. So we are in a fight for sticky inflation. So yeah, it could go down to 6, right? And it's just going to keep creating this little downtrend. But at the end of the day, it ain't about to just fall like a rock. It's going to get a pop. It's going to get a pop. And I won't be surprised if we get to pop this report, because this report is really going to contain a lot of when China reopened and all of that stuff. Now, there's going to be some post-holiday stuff. So I really don't know how to prepare for this CPI report. You already had them tweak how they measure it. So again, these next 3 CPI reports, I was just like, I'm gonna just let the numbers come out and see how this new calculation affects it. How does the data affect it? And just, I'm looking at it like this. Is it hotter than expected? Is it in line, or does it come in cooler? That's all I really care about. I don't really care about the number. I just more so want to see how do they portray it in the media, and is it hot, cold, or in line? Once I get that, I'll look at what the reaction is, and I'll make my assessment from there. But that's basically CPI. Then on Wednesday, you come follow that up with PPI, retail sales, and Empire State Manufacturing. More data. Don't let retail sales be another hot number. That means people not stopping spending. That's not a good thing. So you need this to be a negative number, right? Don't let PPI be hot, because that's mean manufacturers and them still spending more money, and they gross margin is going to get hit. So that narrative of hot could still be playing out. When we get to Thursday, I think Thursday is finally going to be our chill day. That's when it's like we might finally have a day to breathe from just all the excitement that's going to happen this week. With Monday being about the banks, Tuesday CPI, Wednesday PPI, and all that data. Thursday might be like one of those days you can just be like, shit crazy. Then Friday, you better pump up the oxygen, because we get right back into it, and it's OPEX, and you get consumer sentiment. And as y'all know, I love to go to the Max Payne. I don't know if I have Max Payne pulled up, just so we are aware of what Max Payne is for Friday. Let me pull it up real quick. Man, I hate that I always be having to go through all that stuff right there. All right, so there we go. 317. I'm gonna go SPY. I'm not about to be no Patreon dog. My bad, y'all. Okay, let me zoom in on this. So this is, I don't think that's the 13th. Yep, it's the 17th. All right, here we go. So if I can zoom in on that. So as you can see, created here, stock price is 387. Max Payne is going to be 400. So if you go look at these put walls, you got a put wall of 145,000 puts at 390. You got a put wall at 394 of 102,000. You got a put wall at 400. You got a put wall at 385. I mean, just look at all these goddamn puts. I mean, this is all put walls. And then you got a nice call wall at 420, and you got a call wall at 430. So it makes sense for premium sellers in the market to make the most money. The reason why they want to have the market stay at 400 is because you clap all of these people and you clap all of these people, and you get to keep all that premium. You keep all that premium. So just be mindful that Max Payne for quad witching is 400, or basically 4,000. Now this can change. Let me put that out there. This is always privy to change, so you can always keep updating it. But I usually pay attention to Max Payne on the OPEX week, because that's usually when it hits. That's the best time it usually hits, is during OPEX week. So let's just see what happens with that story there. So let me get back into the calendar. So that was Max Payne. We talked about that. I think I'm about to hit the point where I can bring my guests on, and now it's really, really about to get juicy. So we went through the economic calendar. We looked at the economic calendar. We looked at the earnings calendar. I'm sorry, I just repeated myself. Okay, so last thing I wanted to look at before I bring my guests on is so y'all know I usually like to show my Charles Schwab Weekly Traders Outlook, but the guy that does that report, he's actually out on a sabbatical, so we don't get the report this week. But Wells Fargo does one too, and Wells Fargo put out their look ahead, and so I want to share a couple of things from Wells Fargo that they had in their notes that I think is privy. That's going to make for good conversation when I bring my guests on too. So the one thing I love about Wells Fargo's report is I love how they tie in the narrative with the chart. This is why I always be like, bro, the narrative is important, man. I don't care what nobody say. Narrative is important. So at the end of the day, you can see how this is all the news that was coming out, and this is how the market traded, right? So initial jobs claims came in higher than expected. Non-farm payroll rise more than forecasted, and then you got unemployment went up to 3.6. Exactly what I talked about. But look what happened. Pow! Now, of course, we had that drop, and some of that was associated with the financial services massive sell-off. They got that in there. But look at that. This is another thing that get swept under the rug. Not many people talking about the 2-year hit 5% for the first time since 2007, and it stayed up there. Now, mind you, at the end of the week, it pulled back, but that was big. That also was impacting to the market, right? We knew that basically Powell was going to testify. You can see Powell announces interest rates are going higher for longer. So everything I just kind of recap, they give it to you in a nice little beautiful picture here, and they show you how it goes with the chart. So I love how they do that. Then they go into some higher information of just breaking it down. But here's your treasury yield performance versus rate hikes. This is another dope information that they share. But what I'm really trying to get to is here. This is going to be good. So I'm going to read this part first, but I want to make sure I'm getting, and then I'm going to look at this look ahead. So that's the two parts I wanted to share with y'all. So this is the first part I wanted to share. The end of the week also brought a sell-off in the financial sector following troubles at SVB Financial Group and Silvergate Capital Group. I mentioned there was some other cracks in the system. It wasn't just this one. On Wednesday evening, SVB, which caters to the technology sector, announced, hey, they need to raise a couple more dollars because they want to offset some bond sales and elevated cash burn, right? So basically, they was like, look, man, we need to raise some money. But that tipped off some investors, because then they ran to their founders and companies and was like, yo, pull your money. And then that's why you had that big bank run. And because SVB is a digital bank, that's how you able to get $42 billion withdrawn in one day on a Thursday, because there was no safeguards in place. You could just go online and transfer your shit out. But we're gonna get into that. By Friday morning, CNBC reported SVB was considered selling itself after attempts to raise capital failed. On Thursday, you had Silvergate, which specializes in services for the crypto market, announced they was closing their operations after runs on deposit forced them to sell and lay off 40% of its staff. Also impacting was the scrutiny on the collapse of FT. Boy, hey, I didn't even read this Wells Fargo joint before I did my thing, but damn if they ain't just say everything I said about FTX happening and then the Silvergate happened. I'm telling y'all, man, you got to follow the narrative and what be going on, because I don't believe this shit is by coincidence, bro. So anyway, you had all this stuff happen, and you have all these troubles, and it sent banking shares retreating. So that's that part, right? So I wanted to have that. The last thing before I get my guests on is the look ahead, right? So next week, what they're going to be talking about is market participants can expect a slew of U.S. market data ahead of the FOMC. At the beginning of the week, investors can expect February CPI, PPI. Let's go ahead and add in this whole, all this banking stuff, right? For both data points, analysts anticipate that they will show inflation rates have eased from prior month's print. So they kind of expecting, things to kind of cool off. It says 6% was the expectation. As the week continues, more inflation indicators will be released along with a flurry of housing market data. We don't really got a international. Many countries are slated to release multiple inflationary readings. The Chinese government is about to release some stuff, and blah 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 blah. A blackout period starts on March 11th, ahead of the March 22nd period, which to me is kind of weird that the blackout period starts yesterday, but then they're gonna have this emergency meeting tomorrow, and so it's gonna be good to see. You know, y'all supposed to be in a blackout period. Are y'all gonna come out and talk? Is Powell gonna release a statement or what? We gonna, bruh, it's gonna be good. That's all I can say, y'all. And that's pretty much it. If you want this report, I'm gonna drop it in the comments. Y'all can go check it out if you want yourself. So there you go. It's in the comments. You can check out this report if you want to check it out. And so, yeah, right at 30 minutes, perfect timing. Perfect in timing, because I wanted to get through my spiel before I get my guests on. So let me just check, make sure I got all of that out the way. And so, yeah, I did. We didn't get to the technical indicators and all that, but I'm sure once my guests get on, we're going to have a really robust conversation. So with that being said, let me bring on two people that are going to add some spice to this conversation. So y'all seen a few of them on a few different shows, probably my show as well. But I'm going to go ahead and bring them on. So first, let me introduce y'all my good brother, Amit. So shout out to Amit. What's good, Amit? Welcome, brother.
Yeah, family, I'm doing well, man. Blessed to be here. Excited.
Welcome. And then I got E. So E wanted to join.
Hell yeah.
Have a little convo. So I got two people. So first, it was just going to be me and Amit. And then E was like, bro, I got some things I need to get off my mind. So I was like, hey, look, this is where we're going to cap it, but we're going to rock out. And so I wanted to welcome you two brothers to the Night Sativa Sunday episode. And what's best is when you guys are talking, y'all gonna give me a chance to hit my motherfucking J. So, brothers, where y'all want to start? First, how y'all doing, man? How are you, brother? First of all, congratulations on all the success you've been experiencing lately, man, with your company. I want to, just give you big props on Writey. I mean, you on the come up. I seen you do that, and you just been doing amazing things. And shout out to he helped my sister, bro. Like my sister went and got her resume done in like 2 weeks, got a job making nice money. You know what I'm saying? Like I'm like, all right, girl. So I appreciate everything you have done for me and my family, bro. So and just that congrats.
Yeah, absolutely, man. Right now I'm based out of Tulsa, Oklahoma. So Tulsa, Oklahoma has a lot of roots for, everyone that's watching the show with the Tulsa massacres and, Black Wall Street. So my company, Writey, we just locked in a pre-seed round of $2.5 million over the past year. We went on Mark's show to do our first ever pitch, and a year later, $2.5 million in the bank.
Beautiful.
But what bank? Yeah. Yeah. But man, just serial entrepreneur. Been in the stock option game for 7+ years now. Started with penny stocks, paper traded, then got into options, then went into advanced options. And, it's all about just giving back to everyone and the people. So to be on the show, Zay, is a pleasure. Thanks for having me.
Always, brother. E, what's good, man? You've been over here before. The people should know you. What's up, bro? How you?
I'm good, man. I'm actually ready for this convo right here, and
yeah.
I think it's gonna be a different convo now because of some things that have already unfolded. So I think even now it's even more.
Well, listen. With that being said, to cut you off, let's just jump into it, man. Let's kind of just touch on this bank. I know I really listen for everybody that's watching this. One thing I want to say before we get into this topic is this is the reason why I titled the video the way I did: operating through the noise. Staying calm during the chaos, week 2, March Showdown. Because ever since this SVB stuff happened, all over Twitter, it's just everywhere. I'm glad we got Amit here because he can speak a little bit because he got first-hand experience. So he's in the know. So he's not about to be speculating on. Like, we're going to get some real good info, right? Now, we don't want to go too deep because we already kind of talked about it. We ain't going to go too deep into it. But a lot of people are just like, oh, it's going to cause a big bang. It's a lot of just people just causing fear. I don't want us to cause fear tonight. We're just going to have a robust dialogue of what's some probabilities, what's some outcomes, what can happen, how do people need to prepare. We're not here to cause fear. We're not about to fucking be like, you know what I'm saying? It's the end of the banking. Ooh, and it got Keith on that. Ooh.
Why now?
So we not about here to induce no fear, but we are gonna give y'all the facts. It might be a little scary, but we not here to induce fear. So that was the main thing that I wanted to make sure I expressed tonight, because I'm not about that. So with that being said, let's go ahead and get into this topic, man. I kind of saved it for y'all when y'all got on. I know there's a lot going around. So E, let's start with you before we get to Abid. So let's hear what what's your
so dialogue has changed from what it would have been, right? Like, because pretty much they've already Yellen has already pretty much came out and said, like, we're saving SBV, and then they're also saving Signature Bank. I don't know if y'all seen that as well, but they closed Signature Bank. That is officially closed. But all their deposits.
You say Signature, I feel like are you sure that's the right bank?
Signature New York is the one that is closed. And so
I heard about that.
This goes back to that conversation me and you were having earlier today, where I think this was one of those situations where they do think it could have gotten further out of hand with the with Continuing and everything else, that they wanted to get ahead of it, right? And that's why you see what you're seeing with Signature right now. And I'm actually glad you're on. I know Zay told me you don't want to get too deep into that side of what happened for you, but I do think you will have great insight on this conversation, right? As you were in some way, shape, or form affected. Things look different now, but when I'm reading the report that the Department of Treasury put out, I don't think this is a bailout. I think this is, they save, SVB and Signature depositors, and then more new, new policy is coming out of it, right? Like the new funding program that they announced in this statement here, pretty much just states like, we're now doing, I'm going to read it word for word because I don't want to put any false information out there, but it says here in the statement that we will make available additional funding to eligible depository institutions to help assure banks have the ability to meet their needs of depositors. And so I want to see the numbers on what this, this new funding may be. But I think it's going to be interesting. And I think this conversation has changed now, because there's nothing I don't believe now there's anything for us to kind of clear up, right? Like keep people's fear and avoid the noise. What I will say though is this proves that a lot of it was just noise, and there was a lot of fear mongering pushed out by even some of the largest, VCs and people like that. They were pushing this narrative like, oh, it's going to cause this massive line of runs, and I do think it had the potential to, but I don't think I never thought the government or the Federal Reserve would allow it to get to that point because of all the work they've already been doing.
Yeah.
I'll let Ahmed speak on it a little bit. I don't want to run.
Yeah, no, you make a lot of great points, and it's a lot of good feedback, and there's going to be a lot of noise, especially in this environment right now. But I just have to tell everyone, to not panic at all, right? And to realize that one step down is always going to be, set you up for 10 steps forward, right? When you think about the term recession and the past, because everything is reflection on the past, right? We move through cycles, right? And the market is always oscillating. And I say this to say that, like, during a recession, it's a lot of the startups that come out and you get the best innovation in the world, right? You can say that right now we're borderline thinking if we're in a recession or not, but you have to understand that recession or not, you have to be very careful of a deep recession, right? Because if we go into something called a deep recession, then it'll be way more fair than anything that we've ever experienced before. And the numbers and the indicators and everything, they're skyrocketing because this is something that the market's not used to, right? Yeah. Being in this space for quite some time, like, things like this happen, but like the people that panic are the people that get out. The reason why this bank run happened so quickly and so fast was back in 2008 with the Waymo crisis. For everyone, look up Waymo on Wikipedia. That was the largest bank run ever in history. And during that bank run, people had to go in physically and withdraw their money. We're in the 21st century now. We're in 2023, baby. So you don't think people are digitally taking out all their money? You don't think people are selling all their assets digitally as well? So think about that time speed now in today's society and how fast everything could just happen just from fear, right? So I will just say, like, at the end of the day, banks are insured, right? And people that are banking in these banks, they're aware of that, but then that's why it's very important to diversify your assets, right? Go through different banks. Like SVB is mainly for technology, right? It's like a huge technology bank, and there's a lot of VCs and LPs and all that that bank with that. So don't even think about it startups only, right? Think about other people's money and just people that, yeah, like everyone, like in the world, like, and banks are not just like US based, right? Like think about the ties internationally and how this will be a huge rippling effect. But I'm a big long-term thinker, right? Like I can live in the present now, but I can understand that this is just going to help be the next catalyst to push technology more forward.
Right. So let me show something, right? So there's two things I'm gonna ask you, or I want us to talk about, or a couple things I want us to address on this topic. Number one, I want to talk about this. Dave said that's the purpose of banks stress tests. Now I want to say something. I researched this. Regional banks don't go through stress tests.
Nope, they don't meet that threshold.
So that is how this issue slipped through the cracks. That's issue number one. So to what you said, new policy, I believe you will start to see some type of stress test on regional banks because of this, right? So that's issue number one. That's one of the reasons why I'm not as concerned about a bank run on a big bank like a JP. Like I don't think it's gonna get that far. It's hard for me to see that. And me and E, we talked about it personally as far as what would have to go down for that to happen. And we already said it has to be some dire situations.
Yeah.
You know what I mean? Like it's gotta be some World War III type of shit for people to run to a JP Morgan and take all your money out. You know what I mean? So now the other thing is this, with this issue and everybody debating, I really want people to really understand a couple things, right? We have depositors versus investors, right? And this was one of the things that I had to step back and understand, because I didn't really want to speak on it too much, but I was retweeting some shit that it seems as if I was like a super go hard, like don't bail them out. But there's two sides, right? Because at the end of the day, when this is solved, somebody not going to be happy. Everybody ain't going to win, right? Now, here is the point where I sympathize and I can empathize with people is as a depositor, meaning I could have just been anybody, had my money in the bank because you was the closest bank. And you know what I'm saying? I'm thinking as long as my money in that bank, you should be great. Right? Even if I'm not a company. So just wake up and be like, bro, I need my money. You know what I mean? Especially if it's more than 250, which is the FDIC insured thing, right? So I can't be mad or upset at the depositors feeling like, bro, like this ain't even my fault. It's not your fault, right? So that's one side. Now you got to think about the other side, which is this is a part of why the fractional banking system is fucked up, because you allow banks to take people's money and then go invest it. Now this bank took y'all money, went and did what they did, and because of mismanagement, now they want to be bailed out. So on the flip side, if they get bailed out, now America like, here y'all go again, bailing out the rich motherfuckers. So it's like, bro, it's look, Aaron, and I ain't got no. And then me and E talked about this. And this is what I wanted to ask people personally. When all this noise is happening, and people talking about bank runs and this bank gonna fail, take a step back and ask yourself these questions. Number one, how does this impact me personally? If it don't impact you personally, okay, cool. Number two, how does it impact my family? If it don't impact you or your family, then for the most part, the level of stress it should cause you is pretty low. Because if I go ask anybody and say, hey, what are you concerned about the most? They're gonna say themselves and their family. And after that, they were like, well, shit, I don't care. You know what I'm saying? Like, as long as it don't really impact my family or me, I'll find a way around it, right?
Yeah.
So, but then after that, this is where it gets good though, because once you now are able to take a step back and look at it from a non-personal perspective, meaning it ain't gonna impact you, so you can look at it very objectively and non-biased. Then you can see all sides and think very clearly. And then you say, okay, well, what's the impact on the world? Well, if this bank were to fail, ultimately the impact on the world is that, you'll have like we talked about, you have companies that at no fault of their own will, may go under. They're going to be hurt. They're going to feel pain, right? But it's just going to be, and I hate to say it this way, but that's just going to be a small few when you look at the majority. And so when people be like, again, that's why I said when you talk about this whole, can you bail them out? It's going to be a sticky situation because, dog, the Fed got $8.4 trillion on their balance sheet, bro. It ain't too many more bailouts they could do. I mean, so, at the end of the day, I feel bad for, again, the depositors.
Yeah, but
once we say after the depositors, after that, bro, it's bad management. It's bro, that's like me or any trader saying, yo, government, give me my money back for all my bad trades.
What happened?
Because I mismanaged my money. And so again, like what he said, you gotta, it's gonna be some regulations or some new things that come out of that. I think you have to start to take a look at the fractional banking system, which is that for every dollar a bank can take in, they can give out 10. So this is a prime example of them taking in all this money, them going investments, and then when people want their money, they ain't got it because they out here lollygagging and lost the shit.
Yeah,
you know what I mean? Because you done over leverage yourself, and so it's just it speaks to the deeper levels that I think this impacts and that this shows and starts to show the cracks. Give me 1 second. One more thing I want to say, and I'm gonna let y'all talk. But is Ahmed, you mentioned indicators. Bruh, I'm gonna show one that at the end of the day, I don't care what nobody say. This right here is the one that tells me shit is gonna hit the fan.
Ooh.
The U.S. 2 year, when you go and put this on a 12-month, meaning this is yearly, bro. This right here is let's just start, right? This is the 2000 crash. Okay. Yep. This is as high as it got in 2000 crash. Then you got the 06, 07 crash. It got this high.
Mm-hmm.
The 2018 crash, right? 2020, John.
Never broke the highs.
Bro, we ain't never been this high. Like, this is worse than 06. This is worse than the 99. This yield curve is inverted so bad. And then when I go to a monthly, and then I'll just put it on camera so y'all can really see how bad it is, right? Look at that. It's so bad. This is literally all-time highs. Look at that. And it's just going, it's just up and up and up. Now, every time this yield curve has turned down, that's when it gets bad. So just imagine when this thing finally actually comes down from levels it's never been at before.
Yeah.
We don't know. We are about to see something unprecedented, bro. Again, I'm not trying to fearmonger people.
Some of this
is something we've never seen before.
Time frame. Look at the time frames between the gaps.
Bro, this right here. If I just do this, if I just do proofing and say, let's say this is the top and this is the bottom, and let's say this is the top, this will put us at around 2025 by the end of 2024.
Woo!
That's a story.
And so far, listen, here's another thing I'm going to say on my show tonight, and I'm going to take the screen off, is that people want to debate about if it's a recession or not. I'm not having that debate no more because at the end of the day, none of our opinion matter because none of us are the decision maker. None of us are on that board that actually decides when a recession happens. And right now, that board has said there ain't been no goddamn recession. So it ain't no recession. It ain't happened yet. You can't debate me on it because it ain't been declared.
It hasn't
been declared.
Hasn't been declared. We're not.
And there's some people out there who will battle you and say it's not a recession. So how, like, you know what I mean? Like,
Yeah.
So at the end of the day, when this thing starts coming down and the real recession hit, shout out to my boy Ron Walker. When the real recession hit, and that in at the end of 23 and the 24, it's gonna be. I think it's gonna be real.
I'm gonna need to see more GDP decline too. I'm gonna need to see more decline on the GDP as well.
Yeah, like GDP way too high, unemployment way too low.
Hey, look, I tweeted something earlier today, and I was like, I'm done having conversations with people who got personal bias in fact-based conversations. Like it's just not a thing no more. Like we're not doing that. Like if these are fact-based conversations, let's leave it there. And
yeah, like everything we talked about, it just showed. I'm not making this up. I'm giving you facts.
Like we're proving it with the charts, and
not even the charts. We show it all data.
Yeah,
I showed you all data. CMB tool. We looked at the well. All this is the data. I'm not making this up.
Nope. Wells Fargo. You know what I mean?
Making this up.
Hey, but so on to that, or a little bit back to the topic of just the whole SBVC or that SBV thing, right? In this situation, like you said, like if you don't have any personal matters in it, like it really shouldn't affect you. The issue though was the fear mongering, right? And then you really only seen it within financial circles. Like when I really took a step back and looked at the whole situation, nobody around me was really even like thinking about it. Like it wasn't something that was on the minds of regular everyday civilians. Like if you're not trading stocks, if you're not in finance, like
you like what? What happened?
If you're not in tech, then this really, it's like
you like it's honestly, I hate to say it this way, but debate it was a niche, unique situation. It was
a unique situation, but like if you were a person in finance and you studied like economics and like you understand like industries and like what's up, what's down, like we've already seen tech hurting for the past year, right? Because of this correction, because of the bubble that had to pop because of what COVID had caused. Right. Now we're seeing this take a hit on startups, right? And the private equity realm as well. This, to me, in my opinion, is kind of like a filter, like a hardcore filter. And whatever startups come out of this, whatever funds come out of this, those are the actual big dogs. You know what I mean? People that were able to actually weather the storm.
And me and Zay had that conversation earlier today. Like, because the conversation is different now because they've already been saved, right? Like we already got word that they've been saved. But earlier when me and Zay had this conversation, my exact wording on this was, if you have a good company that has solid basis and you were able to raise funds before, in this type of, when something like this happens, you never blame the patient for malpractice. And that's what this was, right? That bank, SBV, performed malpractice on patients which were depositors. And so if your business idea or just the business model, if everything was solid and a good idea, you would have no trouble getting back out there and raising that capital again, because there were VCs and everybody else out there who didn't have any funds with SBV or had minimal funds with them, who would have been more than happy to come in and save those good companies that you mentioned, Amit, that, it's going to be a different beast when we get to the other side of it. But then when I look at the data, right, and because we are a data-based platform, it was a lot of things told you that what happened was going to happen, right? When you look at the history of the United States, there's only been 2 instances where a bank has failed and the FDIC didn't insure those depositors.
Right.
So when you look at that, you're like, okay, like you kind of know what's coming with that. Like I hate to say it like that because there are always one-offs, but when I look at that, I was already leaning more to the side, like they're gonna come help them out more than anything, right?
Right.
And then again, like there's a chart, and I don't know if Zay can pull it up or not, but when you look at it, SBV was not the only one who had that same risk profile. When we talking about banks.
Where did you say that picture? I could show.
I think I had texted to you, but I don't
Put
know.
it in send it to me through the DM joke real quick.
Okay, I got you. But yeah, like when I look at that and I'm like, yo, like I gotta turn my camera off. Hold on. But when I look at that and I'm like, yo, it's multiple banks with this same risk profile. You're not going to tell me that, because if you don't come in and say them SBV, what precedent are you setting? And what,
Yeah.
or you almost tell the consumer, like, don't trust your banks if you don't say so.
1,000%, and it's like, people are looking at it like, who's next? What's next? Now,
Right.
now we're trying to find similar banks that have the same correlation of how SVB was ran, but SVB was its own like smart way of investing, like type of bank setup, like for a while now, like, but it saw highs 2 years ago of like $600, and now it's like, what it was. So we've already seen a decline of it, but I've inferred it as, okay, tech is going down, so that's the reason why this was, going down as well. But, it had other things under the hood. But I will say that I'm just looking forward to what's going to spring out of this. Like all the incentives that they're going to give startups now. There's going to be more people that are going to want to jump into the startup universe. There's going to be more people that are going to want to now, raise more capital. So we're going to probably see a huge influx of people that raise capital. And I pray to God that it's more Black and colored, brown people all over the world, because it's just such a disparity of, the percentage of people that actually go and successfully raise. Because like I look at, there's entrepreneurship, and then there's people that have startups, right? And then there's people that have funded startups. Like there's like levels to it. And for the people that like had to cut their payrolls, for the people that had to, now become unemployed because like all of this happened in less than 36 hours. Like I felt like some people, a lot of companies may have overreacted, but like at the same time, they probably had a lot of burn rate. Right now, this is a huge wake up to a lot of companies to look at how much are they expensing. But like the beauty of tech companies is that like the margins are so sexy, especially in software. And that's why I love software. Because it doesn't take much, right? You have your product, you have a developer build it, and then you're just selling it in MMR. Right? Like look at Netflix. Netflix is one of my favorite SaaS companies. But I just say like, yeah, man, we just gotta wait it out, and see what really happens. But I think overall with the market, this sparked a catalyst. Like this catalyst came out of nowhere. So if this is good news tomorrow, we all know the whole tech market is gonna run. Let's be honest. We're gonna see SPY, gap up, and
we about to get into basically the end now, and we're gonna actually good segue, right? So with that whole gap up, I mean, honestly, this is why I love doing my show on Sunday nights now, because we actually get a glimpse at the futures market, and bruh, it's up a percent already.
Yeah.
So yeah, it's already up a whole percent. We at 39.
They may be feeling it, and
so you got tech is up 1%. You got the Dow up 257, up 0.8. So you look at the 1 day. So yeah, we basically are engulfing. We gapping up over Friday. So and then if you look at Bitcoin, so that Jane just, I don't know what the fuck happened, but it's they gonna
once they announce
for me, I think this is a liquidity injection though. Like I'm gonna keep it real. They talking about they look as soon. Oh my god, bro. Hold on. All right, I gotta bring this. Look, this is what I'm saying, bro. This was one of the points, and I told Eos I gotta bring this up, bro. Have y'all ever seen a fiend try to go cold turkey? That is the U.S. economy, or that is the U.S. economy trying to get off QE.
Oh,
they can't do it. They can't do it. They can't do it.
Hey, man.
They can't do it. They can't do it. You know what I mean? Because look at it. As soon as something crack,
this quad pushing period, we're gonna see some big contracts sell off.
Yeah,
I sent that picture to you Tuesday. I don't know.
Okay, all right. So yeah, all right. So let me end it here because we coming up on an hour, and I usually like to end my show at an hour.
Yeah.
So, but I do want to end it with one last question for everybody. We gonna say it with y'all, but I'm posing to see who's still on. And I know you sent me that picture. Let me see real quick. So let me see if I can pull this up right before we bounce. Where'd you send it to me at?
Discord admin chat.
All right.
I figured that would be the easiest way.
Yeah, that's cool. That's cool. I got it. Boom. All right. Let me add this to the stream. Oh shit. I got the boom. Damn, you can't see none of that. It's still gonna be super blurry, but
yeah. Dang it.
I'm gonna probably make it right there. That's probably good enough. But right here is where. So this is the main part you wanted to show anyway.
Yeah, I was really just the banks that are in red, right? They all have.
So this bottom group, if you can't really see, I read it. That's Citigroup, that's Signature Bank, that's State Street, that's Northern Trust, that's SVB Financial, and then that's the Bank of New York Mellon Corp.
And when you look at that list, right, like they all had similar risk profile to SBVC or SBV.
And let me just say this real quick. This is deposits less than 250K as a percentage of total deposits. That's the exhibit we're looking at.
Yep.
So that's basically what happened. And so, yeah, I mean,
people that have less than 250K.
Huh?
Like usually total deposits, like majority of the people have less than 250K probably, like that they deposit into these banks. That's what that means.
Okay, my bad. Well, thanks for the correction, Mike.
No, that's what you said. I'm just breaking it down more.
Oh, yeah, bro. Yeah, so that's a list. So we just got to watch for these banks. You said Signature Bank already got.
It's interesting because the money that's insured, like if this actually happened, would be 250, right? Like if you look at other ones like Mercury or Brex, it's $1 million insured. So if this would have happened to one of those, then people,
I would say, I would say this too, bro. I think that's gonna be another, like what E was saying, how we're gonna get new regulation. I think they might up the FDIC insurance because of this situation.
Yep.
We can see that. You know,
I just want to make this last point, Zay. I know.
I know. I did not want to talk about this topic this long, but it's all right. Go ahead, keep going. It's good. It's good dialogue, though. It was great dialogue. That's why I respect because our shit was real.
I would just wrap up with saying this, right? Like when you look at this situation, it is now time for regulators and everyone else to look at what has happened over the course of history, and we need to be able to separate personal depositors and business depositors when we are mixing, funds into a financial institution. And I'm gonna leave it there, y'all.
No, that's good. That's good.
Okay.
This is all right. So we're gonna transition off that topic. At the end of the day, people. My card. That's fine. I'm still good though. My card is full. That's fine. All right. And I'm glad that we about to end. So here's the last question. What is the probability of the market making a big move to the upside prior to CPI, PPI, quad witching, and the Fed decision on March 22nd? And you don't got to give it a percentage. You can say low, medium, or high, and why. That's the question, that we're going to end the episode with on this week. I mean, we could talk about it here for a little while, but for everybody watching it, as we go into this week and as we go into Friday, as we get to Friday and quad witching is upon us, and we about to get all this, data, and we know we got that decision next Wednesday, right? Next Wednesday. What is the probability of oops? I'm gonna be right back. Yep, there we go. So what is the probability of the market making a move to the upside a move to the upside before those events? What y'all think?
Yeah, so I would say honestly, you can so one, I would say high, but I would also say that in certain situations like this, I would honestly just play the sidelines and watch exactly what happens and then catch the news after. Like, yes, you're going to miss out on a run, but over time, like if your thesis was right, then you'll still, meet new support lines,
Mhm.
So I'm gonna go with medium now. Earlier, I had a low probability, but that was with the uncertainty of the banks, or with the bank situation. I think now with that happen, with them being saved, I think the market is gonna kind of ride that into tomorrow. You know, we're going to have a nice upside day, and then I think everything else is left up to the data at that point. And so I'm on my Jerome Powell. I am influenced. I am moved by the data. I'm not moved by anything other than the data right now. So right now, the first piece of data was they saved these banks, and we're getting some upside off of it. I'll let CPI, PPI, and Quad Witchin do the rest there ahead of the 500.
Like this week is either gonna be like a lot of volatility per days, or it's just gonna be a really choppy day and just build up into, you know, the news.
Yep.
You just have to let time play it out. I feel like, but
Hey Zay, you remember when we talked about the stock market Super Bowl, right? It was a couple months ago when we was like waiting on that. It was one of them FOMC decisions we was waiting on. I think this is the real. I want to say this is going to be the real Super Bowl here, and part of that goes into the fact that this is going to be the first. This is the month that the federal funds actually started raising rates last year. This was the meeting they did, and this was that first meeting or CPI report that happened with the Ukraine-Russia situation. Right. So like the way the data was skewed through that time period, these reports I think are going to matter. I don't want to say the most, but these are going to be some of the most important readings we get this year.
Word. So I appreciate you guys' perspective. So I'm gonna go ahead and give mine. We're gonna wrap this episode up.
Yeah, for real. Like if it breaks that support, bro, we all know it's gonna go down. But
I guess so. Yeah, that's why I was saying. How I like to do. So I'm looking at the charts, and I'm always gonna put things like this. So here's how I look at it, right? Y'all, if people been rocking with the show, y'all know how it's been. At the end of the day, from the very beginning, these fibs is what I've done, and this is what I've been sticking to. A couple weeks back, I said 3998. If we broke that number, you know what I'm saying? That's where I felt like that could be where the Bears had regained control. It was the relief. Actually, no, we had the relief rally week, and then it was last week. It was last week when I was like, yo, it's time for the Bears. If you're going to do it, you got to step in and do it now. With a 4% down week, I think exactly a lot of people expect like, oh, because we just had that big down week. A lot of people are like, oh, it's gonna be a high probability that we're gonna bounce. And a lot of people are like, okay, well, they're stepping in the banks to save them. I'm gonna keep it real. When it comes down to it, I'm big on the psychology game. And when I look at how this is playing out, that means you telling me you expect by Friday that the market can come back up to 369 and come back to this 398. I'm gonna keep it real. From a market structure perspective, and when I think about you still don't know if he's going to do a 2.5 or a 0.5, to think that we're going to get back above 4,000 before that decision, I think it's a low probability. And so therefore, I'm sticking with my guns, which is I see us coming down to at least 3,800 by Friday, if not 3,775. And what that will look like is, hey, from a market structure perspective, is you got your wave one, right? You got wave one, boom. You get wave two with the pop, and then wave three is always the longer wave, and it goes straight down to here. And then when the Powell makes his decision, you get your pop. And we can go from there, and I ain't gonna go much further, but that's just the analysis that I have and how I'm, playing my situation out. Because at the end of the day, when I ask myself that question of, what level of probability do I see us really like? Now, don't get me wrong, we may retrace, and we retracing right now, right? This is just a retrace to me right now. To keep it funky, shout out to my guy Breland, the 12-hour trader. Bro, this ain't nothing right now but a retrace, because when you look at this 12-hour, there's a gap right here. And you got this big long candle. So we can come all the way up to here, but bro, you ain't really making no damage until you get really above 40-20. And it's gonna take a lot for the market to get that with fucking CPI, PPI, You still got Quad wishing on Friday. Yeah, okay. Granted, Max Payne is 4,000. So we did talk about that. So let me point that out, right? So Max Payne is all the way up here. So the Payne trade could be to the upside. However, we know that's all going to be data dependent because when it comes down to Tuesday, if CPI is hotter, Raleigh dead.
Yeah.
If it's cooler, then okay, we might have a shot at 4,000. You know what I'm saying? We might have a shot.
That's why I said I think these are the most important data points this year. This one right here.
Yeah, it's gonna be, then before we end it, like we said, next Wednesday is when you actually get the decision. So when you look at this from a weekly perspective, that is an engulfing candle, bro. Wave one, you get your pop. You got a fully bearish engulfing candle that engulfed damn near the entire year of the whole rally.
Yeah.
You know what I'm saying? And again, and if you just use pivot, shout out to me, Pivot King. If that thing don't get back above 39.67, it's lights out. It's lights out. It can retrace at 39.67, and then that shit it's game over, bro. It's game over. And it's got to get weekly closes. So at the end of the day, I ain't talking about no day-to-day shit. Weekly close by Friday.
Yeah.
That's all I'm worried about. I don't care about the intraday. It's going to be a whole bunch of intraday shit. But by Friday, when Quad, what's it called? We going to see. We going to see. Because and again, I'm objective, right? You know what I'm saying? Because I do know that if the data's cooler and they do inject liquidity, I ain't no fool. The market probably will rally. You know what I'm saying? But at the same time, this narrative ain't looking good. And 3 weeks ago, I was like, yo, watch out for this narrative shift. And all they pumping is fear, fear, fear. And I said that. I swear to God, y'all, if y'all been keeping up with my show, I said about 3 weeks ago, watch how they start pumping fear, fear, fear. What did we just say? All the fear mongering. Hey, man, I ain't no dummy, bro. I'm telling you, this mind shit and how they play these psychological games is real, man. Y'all, I'm telling you, man. They fear to get people scared. When you scared, then you start acting irrational.
And sell.
I'm telling you.
Yeah, no, you're absolutely right with the fear, man. And the fear is what's going to cause the selling.
Yeah, and that's what's going to cause your recession. You know what I'm saying? Like, all they're going to do, they want to get people worked up and scared.
It's just the time that they release the news and the time that
bro, that shit is not no coincidence, man.
To that point too, that emergency Federal Reserve meeting that had already been scheduled before the TV happened. Now they try to tie those together. Like, come on,
wait a minute. We're not even gonna do that. We're gonna dispel that myth right here because I already peeped it. So these little secret meetings, they have them frequently. This is the schedule right here. Bro, they got one on the 13th. They had one on the 21st. They had one on the 14th. They had one at the end of February and January. They had one January 23rd. They had one on the 28th. They had one in December. Like, they have these frequently.
Yeah.
But you see how every time there's some crazy event, back to Ukraine and Russia, now the SVB bank, soon as some crazy thing happens and they already have one scheduled, now somehow they're tied in together. And like you said, it's all about creating that narrative. Bro, I swear to God, shout out to my guy Dave. I hope he's still watching. If y'all ever remember that episode he did with the narrative economics, go watch. I forgot what the guy's name is, but stories are like contagions and diseases. It don't take long for something to catch on and take hold and cause panic and fear. This is exactly what's happening. I swear, man, this is some Great Depression shit. If you got people scared they can't get money, it's bank. Bro, the last time we seen bank runs was either 08 or the Great Depression.
I was to bring up my point, bro. Imagine how fast these runs are gonna be.
Because, like you said, it's a digital age now, so I could just transfer my shit. You know what I'm saying? So, man, listen. All I know is this, man.
But if they do, if people are taking their money out, then what else are they gonna go invest in? Gold, silver.
Bro, they're going to other banks. That's the thing. If they pull money out of regional banks, they go into big 5 banks, and then who's to say that don't cause something there? Like I said it and I'll keep saying it, but it's a damned if you do, damned if you don't type of environment.
It is.
What you do, somebody's getting the bad side of this thing.
Yep. So with that, man, let me hit these comments real quick before we rock out, y'all. So, hey, man, I'm in E, man. Great conversation tonight, man. We definitely killed it. I told people it's going to be one of them ones, man. I felt it in my gut, man. Great convo. So let me hit the comments.
Anytime, man. Anytime.
Hey, it was great to meet you.
We got who we had. He said, so at one point in time, Tim said Powell had a big, because he'd been saying they would crash the economy need be. Yeah. Dave said 0.25 had been a mistake if I really didn't understand it because the seasonal this upcoming C5 reading is winging and rushing. So watch out. Yep, y'all. We talked about that. You brought that up. Dave was saying watch 20%. All-time highs bear territory is about 383.98 on SPY. So shout out to him. Premium sellers at EN. Yep, you damn right about that. Marvin said I thought I was tripping about this. Nah, yeah, dude is on a sabbatical, so they didn't publish it that week, man. Biden is what's up, Uncle Charles? I didn't even know you was on here, man. Biden will be speaking tonight. Hit the like button, please do. Zay, hit the button. I did hit the button. You got save. CV will make a whole bank deposits. Okay. I think there was some more stuff. Where we at? Let's see. All right, we got some high.
They did announce that depositors will be able to access their funds tomorrow.
Yeah. Say what? Invites crescent moons to low probability. Okay, I see. Oh, here you go, right here. Yeah, this one. Okay, so narrative economics: how stories go viral and drive major economic events by Robert J. Schiller. Yes, go watch that video. If you watch that, you will see through time the same stories get recycled. Literally the same. When you go watch it, you're gonna be like, damn, that shit sound like what they talking about today. How robots gonna take jobs. You know what I'm saying? Just how people losing jobs, just inflation. Please.
Diseases.
Please go watch that. And
just
watch and just think about how these stories go viral, like how all of a sudden everybody was tweeting about SVB like they know about banks, and then and let's watch to see how these stories go viral and stuff, and it causes and what happens is ultimately all of that negativity is what really creates a storm. And then it's just like that is one event that ultimately they say, oh, it was that one, but it really wasn't. It was really a contagion of just stories. You know what I mean? Like there's so much more. So look, man, like I was saying, fellas, that's all we wanted to get into tonight. For next week, I mean, of course, at the end of the day, next week's show gonna be crazy because we about to get through all this craziness this week. So yeah, man. So next week gonna be a really, really dope show. I can't wait to see how this week goes, man. But like I always tell everybody, man, at the end of the day, guys, stay objective, right? You know what I'm saying? I do have a bias, but if you see things going a certain way, always be open to the other side. So some people say high probabilities. I respect that. I'm glad y'all said it because now I can look and say, okay, well, what would it take in order for the market to rally? So
it's gonna be on the, but
it's like, what is it gonna take? If they really bail them out and we get a low CPI, I ain't stupid. The market could absolutely rally. You know what I'm saying? But how on the other side, I also think that if it's hot, then this is short lived, and it's just about to be a wrap. You know what I mean? But just be objective, you know what I'm saying? Be patient, don't rush, you know what I'm saying? Just understand that there's always a deeper game to this stuff. And one of the things I always tell the runners is this, bro. Trading is a skill set you learn. And the byproduct of that skill set is the profits you make. So the better your skill set is, the more profits you make. So that doesn't mean you have to trade every day, because once you become a great trader and you know how to go out in the market and spot opportunities and be patient and be disciplined, and you got a system that works, it's like you can print your own paycheck when you want.
No, absolutely.
So what, right? What are you accomplishing by doing all that over trading and stuff? Oh, and I'm gonna give them an exclusivity. We got this thing called the Final Four, bro.
Mm.
If you focus on just getting 100% a quarter, and you do that for 3 years, and you can start with $1,000, but if you just focus on getting 100% per quarter, and you start with 1,000, in 3 years, you'll have $2 million in the bank. Now think about when I say 100% a quarter. A lot of people do 50 fucking trades a quarter, right? And I see people post 500s and this and that and this and that. What if you just say, hey, you know what? I'm gonna just take one trade a quarter and I'm gonna focus on finding a really good opportunity that gets me 100%. And if I do that, I'm gonna chill the rest of that quarter because I've doubled my account, and then the next quarter I'm gonna repeat that process, and I'm gonna just do that for 3 years, and you know you're gonna get to a point where you compounding. So yearly, your ROI ends up being 1,500%.
Yeah.
And you take 4 trades. Now, mind you, you do have a risk management system, right? Because it's not guaranteed. So the risk management system is that you put in a 20% stop loss. Some people can do 30, some people do 25, it's up to you. But at the end of the day, if you nail it, a perfect world is 4 trades and you done for the year, you made 1,500%, right? Or you could break it up. You could go for 2 trades at 50%. It's whatever it fucking floats your boat. But the point is that when you focus and you just take your time and you be patient and disciplined and you just have a plan, that's like, this is how I'm attacking. It's not about over trading or trying to get the. It's about, I know that if I do this for the next 3 years, I'm good.
Hey, best part about it is you can be wrong more than once in that system.
In that system,
you walk away with more than $1 million.
Because it's a 5-to-1 risk reward ratio, right?
No,
if you do 100%,
especially
and you risk 20%, it's
by the time. You just buy the time.
Yeah, you just buy the time too, right? So that's the only gem I'm gonna give you, but there's also a way we attack it that really fortifies it. I can't give that one away, but if you join the runners, boy, oh boy, it's a good one. But at the end of the day, man, you know, that's just, you know, what I would, you know, leave it with, man, especially going into this week, is that you don't need to rush it, man. Like at the end of the day, all this stuff that's going on, stay calm, man. Operate through the noise, like the title say, man. Think about, how does all this stuff impact you personally? How does it impact your family? If it really don't, then look at it objectively, because honestly, it could give you an opportunity in this market where you could go short something, or you may go long something. You know what I'm saying? That's how you got to look at it. If it's not impacting you personally, then is this an opportunity for you? What's the opportunity? You know what I mean? I hate to say it that way, because your opportunity comes at somebody's disadvantage, but that's the market.
It is.
In the market, somebody got to win for you to lose.
There's always a bull market somewhere. There's always a bear market somewhere. Depends on where you look.
I said that wrong. Somebody got to lose in order for you to win. So, yeah, man, that's what we're going to leave it with tonight, man. Like I said, fellas, I appreciate y'all for joining. My man Tajay say great show. Dave said, wait till Great Depression 5-10 years from now. Oh God. I mean, I felt like you said you was feeling like you was about to say it's gonna be bad too.
Yeah.
Appreciate that.
AI is definitely gonna save it.
Yeah, man.
Thank you for having me.
Always, yeah, man. Great show, man. Like I said, man, you fellas, man, I appreciate y'all for having, man. Listen, for everybody that stayed on the route with us the entire time. We appreciate y'all again. Until next Sunday at 7:30. Oh, y'all definitely ain't gonna want to miss next Sunday. I'm gonna have a few more guests. You're welcome to join us again if you want, bro. But yeah, next Sunday. Ooh, so you already know we're gonna be talking about what was CPI. CPI, how did quiet witching go down? What's been the resolution to the bank? Oh man, it's gonna be a jam-packed week. I wish everybody safe trading. Fellas, man, y'all have a great night. Into the crowd, man. Y'all stay blessed. Peace out.
Peace.
Let me